Welcome to Module 4. We will be discussing what the ladders tell you that the charts don't. The content structure of the rest of the module is on slide 3 we focus on what the charts don't show. Then we go to slide 4 and 6 which we describe the major benefits of price ladder information gathering and execution versus utilizing exclusively charts to make your intraday trading decisions. Then on slide 7 we have probably my favorite drills and exercise of the entire program, and I want you to pay very close attention to this drill because this drill will help develop over a period of time your ability to understand all the intricacies and the dynamic parts of the price ladder and order flow patterns. Let's now discuss the key elements of what the charts don't show that the price ladder does. And these are really important points for really an effective intraday strategy where you're trying to optimize your reward versus your risk. And you're also trying to really optimize of when you have your most size in the market or when you have your least size in order to manage your downside. So let's look at the very key elements of what the charts don't show you. Firstly, the charts do not show you the underlying intention of the market and the true activity. Now, why is that? Because you're not seeing the interaction of orders at key critical levels that you observed on your chart, and it's that underlying intention, and intention really being described by, which we'll discuss later on in the next couple of modules, the exchange of orders going through, the auctioning activity, how fast the orders are going through or how slow they're going through at a specific key level or at a specific juncture point that can really unravel the market. Now, if you're a classic chartist and the market starts approaching a key breakout level and approaches that key breakout level with really lethargic, tired activity, or it just breaches the level, it pops it by a couple of ticks, there is no initiative buying. You do not see that on the chart. You can't see. All you see is a candlestick or a bar chart or a line chart trading above a certain level, but you're not seeing how it is being traded. If you're not seeing how it's being trading, how do you judge how much size to expose yourself in the market? If you see strong intention, strong activity towards the level, well, then the probability is the more size you get into the market, there's a high probability that the break will sustain itself. So therefore, knowing that information, because you're observing the auctioning flow and the auctioning activity, you're really able to devote a lot more size to the market. Whereas if it approaches it very slow, pops a level by a couple of ticks, you bought a lump, but the moment it's popped a couple of ticks and it's getting no follow through on the auctioning activity and the speed of orders that are going through on the ladder, you can quickly start reducing your exposure before the market actually comes back down again, and you're exposed more because you're able in real time, having the ability to see at those key levels that you observed on the chart, what is the true underlying intensity and speed of orders at those levels, and what is the interest. And that's what you're trying to deduce, and that's what the charts don't show you, and that's what the ladders do show you. So really critically important. And as I've really mentioned, elaborated quite in quite a bit of detail on the first bullet, so it effectively covers the second bullet point of charts fail to show you the true participation in the underlying market due to a lack of level 2 data. You know, if you look at every single particular price level, at that price level, so if you're looking at 50s on the chart, all you're seeing is what the chart has done prior to reaching towards that level. But on the ladder, you can actually see all the bids within a depth of market of 10 prices below and 10 prices above, and then the exchange of orders going through. So effectively at each price level, you can see the entire order book and how that entire order book changes at each price level, and that will determine your level of conviction. And this game is really about How do you maximize when your level conviction is high, and how do you minimize your risk when your level conviction is low? And it's the order flow that really helps determine those conviction levels. You're adding really the purest form of the market to determine how you're going to execute really effectively. And just remember, most charting strategies deal with market extremes of the chosen time frame, or third derivative oscillators for execution, which is lagging execution. Any third, remember where we discuss the rawest, purest form of the market is order flow, is the price ladder, is the orders interacting in real time, and from there, as the orders are going through the market, the charts, the candlesticks, the bar charts, whatever charting indicators you're using, the moment those orders going through, the charts start mapping them. So by those are second derivatives, and then your oscillators, which are really third derivatives, because they're using particular types of moving averages, and it's all second derivatives on what price is doing. So extremely important that on the price ladder, if you are a breakout trader, or if you're looking at a chart formation, you're always looking at the extremes of the chart. You're always looking at the highs, the lows, but what's going on in between there could be an entire story being told from how the orders are exchanging in that range, prior to where the chartist will only be looking at the extremes. And within that range, you can see what really is building up. If the market is approaching towards those key technical levels at a certain velocity, at a certain speed, at a certain level of exchange, you're able to really work out how you're going to execute your setup, because that story is being unraveled, as opposed to you only reading the content table of a book. You're able to see what really is the context, or all the written words within that story, being the order flow. And remember, order flow creates the patterns, as it's the underlying market that creates. It's the underlying market that creates the chart pattern. So as I mentioned in the prior bullet point, is as the orders are going through the market, which you're seeing in real time dynamically on your price ladder, so then does the chart start putting the various ranges on the chart. So important to understand that this is the purest form of the market. And then remember, charts hide the building blocks of what made the pattern, and the true strength behind the building blocks. Is the bar graph made of concrete or water? You could see a big green candle on your chart, but that green candle went up on fresh air. That green candle went up on 20 lots on every single tick, because maybe that happened after the European cash close, and the market just was unraveling itself. And when you know that the market has been up on fresh air, the likelihood of the reversal is very strong. And you come in the next morning, you remember, you watch the market go up on fresh air, and fresh air meaning that the market is not being supported by strong ordering or auctioning exchange on the ladder. So as that market starts going up on literally nothing, it means it can come back as easily. So you can only see that on the price ladder. You can only see the market has gone up with a strong underlying building blocks of a strong auctioning activity. So as long as the market is being auctioned at every price, therefore it's building, in this example, if we're going up, if the market is auctioning every price with a lot of velocity, then and with a lot of intensity, then the market can keep on going that direction with not much pullback. But if the market goes up with no exchange, and it goes up for 30, 40 ticks, the likelihood of that reversal is very strong when you see a seller step into the market. So these are really key elements of what you see on a chart what you see on a price ladder that you do not see on a chart. Okay, let's go into this even a little bit more further by looking at the major benefits of price ladder information gathering and execution versus exclusive charts. Now, instead of a one-dimensional size approach for specific chart levels, you can manage your size more effectively and lighten a position when a trade is not showing strong order flow characteristics. And we briefly dipped in this on the previous slide. The best traders know when to have the most of their size in the market and when to have as little as possible in the market. And to make that judgment really is dependent on the sheer activity or lack of activity that is going on the price ladder. So if you are going towards a breakout trade, and I've used this example over and over again, and if you are looking for that breakout, but that breakout is not being met, you go on side a couple of ticks, but the activity is not how it should be if the market wants to continue in a direction. And the velocity in the auction exchange, which we discuss later on, and when we just start discussing speed, but you'll start gathering what I really start meaning when I start saying how quickly the orders are going through on the book. And so important to understand that when there is no activity, but perhaps you're observing a certain type of algorithm in the market or a flipper, and you can observe a very concrete pattern, and you can see the balance of probabilities of what the algorithm is doing. As long as the algorithm is there, well, then you can execute with a really aggressive size because you're trading in with a larger participant potentially, or as I said, with a large breakout strategy. If the orders aren't going through, well, then you're going to reduce your risk. If the orders are going through, you're going to maximize your risk. You can't do that on a chart because the chart is one-dimensional. You don't see how fast or slow it's going. You just see time. That's effectively all you see, time versus price. You're not seeing time, price, and order flow activity. It's almost a three-dimensional approach when you're trading on the price ladder. So really important considerations and really important understanding one of the key benefits of how important the price ladder is to managing size. And as I've just mentioned, you can rapidly increase size when the order flow activity picks up towards a critical juncture point. So prior to a breakout point, the market always gives you a subtle clue with the orders that go through the market. As it approaches a level, it starts behaving differently, and it's your ability to observe that behavioral change will then determine the outcome of the trade. Can trade a myriad of patterns within a chart as exposed to the exciting world of volume plays and events. You could have a news item that comes out on the market, all of a sudden a big, large order comes in the market, and that could be happening intra-range, where as a chartist, your eyes aren't open. Because your eyes aren't open because your alert only goes off when it approaches those extreme prices that you're looking at on your chart. But within those ranges, you can see a whole variety of opportunities if you observe various types of order flow patterns that we discuss throughout the rest of this course. And really, as I've just discussed, the intra-range ladder plays and patterns. So when you observe those intra-range patterns, where when the market is quiet, there's not many orders going through, and that generally means it's high time and harvesting season for one big intraday player to potentially start flipping the market. And if you can observe this flipper or this algorithm, and you can observe what they're effectively trying to do on the order book, well, you can scalp in and around that, and you can't see that again, on the charts. And price ladder shows market intention and profitable setups, whilst the charts do not show this. I've discussed this, this slide and the last slide, and really important to understand just why professional traders, since it went from trading on the floors and the exchanges and the pits, when it moved, at the end of the 90s onto screen electronic based trading, why professional traders within proprietary trading floors across the world in the future space, with markets that have a lot of volume and liquidity, why they effectively use and exclusively use the price ladder. Now, we're still going to be looking at a bunch of more reasons why there are a lot more major benefits of price ladder information gathering versus execution exclusively on a chart. As we've said before, price ladder gives substance behind the charts. It's that substance behind the chart of determining whether the chart might reverse, might sustain its move. If the market, as we discuss, later on in the modules, on one of the order flow patterns, if the market is going down and just being flipped down in positions, the likelihood of that reversal is very strong. So really understanding when you get all these different types of characteristics of a price ladder, which determines the substance of the chart or those individual bar candlesticks for that particular type of time frame that you are looking at. Now, one of my favorite personal plays are false break absorbers of major levels. Where you have a key breakout level, say key breakout level to the downside. We always use examples of the upside. Let's start now looking at bearish scenarios. And if you really get this key level towards the downside and the market breaks through it, and it breaks through it by 20 ticks, there's a bit of a stop run, but all of a sudden it goes sideways, and all that's happening is that there's a lot of sell side orders going through, but someone is sitting on the bid. We spoke about this in our trading lingo, but someone is sitting on their bid, and when we look at our absorption module, we'll be able to actually see what that looks like on the ladder when we look at a couple of really key examples. But someone is sitting on that bid and is just absorbing every single sell order for the next half an hour, and it doesn't budge within a 5-tick range. All of a sudden, the market starts moving up towards that previous breakout level, and all those orders that were short and what's called trapped sellers, because all of a sudden they have to unravel, and then the market moves up aggressively. Now you can't see those false you can see a false break once the market shifts back into the chart, into that charting area of where the breakout occurred, but you can spot that a lot quicker and a lot easier, where you can get into a position with considerable size a lot quicker because you observed it on the price ladder. And it's also the ability to work within the boundaries of the chart. We mentioned before that there is a whole host of different opportunities within the ranges of a chart. It doesn't mean this is dead weight or dead matter, or just this random space. Prior to those key breakout levels, or either the upside or the downside, there could be a whole different universe of opportunities for price ladder traders who like trading certain types of order flow, book events, and various edges that they have observed within those trading ranges. It also, the charts do not give you the ability to be dynamic in changing your market view swiftly. So if all of a sudden the market is moving one direction aggressively, and then all of a sudden the personality of that direction changes. On the chart, you still think this market is going one way, but all of a sudden you've observed that personality shift where the market has shifted its gears on the order flow ladder, and you're able to, before the chart does a bearish engulfing or a bullish engulfing candlestick pattern, before that candlestick even develops, you can observe those quick clues on the price ladder before it starts shifting, before the nature of the move starts changing. And just remember, such as breaks not showing the correct volume characteristics. Breaks that don't have strong volume dynamics are not powerful breaks. It means that the market is not unraveling itself beyond a certain boundary. It means there is no initiative activity, as per when you do the market profile course of Brannigan. This is really important, is your ability to know if breaks can be sustained or not will determine how much size you expose yourself to the market. And you can see the world of high frequency trading and other systematic systems that are not observable on charts. Within the chart, you can't see all these dynamic execution strategies, and sometimes some of these dynamic execution strategies have patterns within themselves. And if you can observe that pattern, a certain pattern of an algorithm, then you'll know how to trade around that pattern and actually extract and appropriate profits from that algorithmic system. We talk about the various participants in the next within the next module or two. So really, really important that that opens up another sea of opportunity. And charts do not show you, as we discussed, but it does not show you level 2 or level 3 data. And without that, well, you half of your perception and vision is blinded. Okay, welcome to looking at a video when you start seeing the auctioning speed intra-range where the charts don't show you the change in the velocity, the change in the order flow activity, the change in the speed of the orders that are going through the market. And when it starts happening intra-range before key critical levels that you observe in the chart, you're losing really an opportunity of having the ability to enter the market before it approaches those key levels, or playing significant order flow strategies and types intra-range when you're seeing large orders come into the order book. And as the markets evolve and the technical landscape changes where everyone can see those highs or those lows, and they start becoming a herd zone where a lot of people participate, and therefore becomes a little bit much more choppy and starts affecting your type of trading strategies. With the ladder, you can actually see when there's participants being very hungry to hit the market. And what I'm going to be showing you here is where the market is trading intra-range, and all of a sudden the order flow activity picks up rather significantly as we enter into a month end. That's the German Bund month end, which really finishes at 4:15. But you start seeing the orders, and this isn't just for month end, it's for any single day of the week. Intra-range, where all of a sudden a big order needs to be executed, and through the power of the ladder, you're able to see those orders come through the market. And if you can see which is more powerful on the buy or the sell side by the auctioning activity that it's going through the order book, you're able to get through on trades, leverage trades, where you can take anything from 1-2 ticks out of the market to 10 to 20 ticks out the market. So let's look at this example where the market is now approaching 4:15. The orders that are going through the order book are around 100 to 200 lots every so 30 seconds, but we'll start seeing this really start picking up. The orders that are either lifting the offer or hitting the bid start accelerating. So now let's have a look at this on the replay environment. Okay, so as you can see at 75s over here, we've got already 300 orders go through here, and whilst it's trading this price, 400. 5, and the bid keeps on reloading. Watch over here. So we're gonna bid a 1 lot here, and again there's 200 lots that have gone through. Again, it rebids itself. You can see as it goes down, it consistently rebids itself. So the market has now gone towards 76. So we're gonna add a few more. Say 400 lots have gone through there. So 500 lots. Now the market is starting to aggressively pick up. Market's come back to 76, but you can see the rebidding. Now we're watching the order book. There's 300, 400, 500 lots being stacked over. Back at 75s again, and it reloads. You can see the buyers as they hit the bid. You can see the buyers just reloading themselves, and now the market, stacking 400 lots, 400 lots. You can see now it didn't take much to make it go bid at 77s. You can see what's going through the ladder over here. Another 100 lots up there, 280 lots that just went through, another 100, 130 up there. So you can see the market is already starting to move a little bit more aggressively as you see that buy side activity continue over here. So now we're 1 more minute into 4:15, and we're just observing and watching the action. and the velocity slowed down a bit, but 300 lots have lifted the offer over here. There again, so you can see the activity. So if you were over here, you could have rebid the 78 as you saw that activity. And this is the type of activity that momentum traders love to trade at extremes. But now we're trading intra-range, and you can see this activity. Now we're long here 75s, long here 76s. Now the market has found some intraday resistance. You can see a 1,000 lot has come in there at 78. He's now caused it to offer back down. So you could have booked potentially some of your ticks come back towards 75, which is the key pivot area where that reloader was. So we're watching really closely now. At the moment, it's at 1,000 lots, stands in the way at 78, but someone keeps on rebidding. So they're using the 1,000 lots to potentially get long at 75s and 76s over here. Now we're really approaching this key time. No, 1,500 lots. So you can start adding some size, but it starts coming towards this region over here. So we've bought some more at 78. You can see the 600 lot, 400 lot, 800 lots. It's come back towards the 78s over here. The 78s where we saw that reloaded is bidding. Look at the size coming through the market now as the market really starts taking off. You can see the activity happening on the ladder. So you can start booking some of your prices as now the orders are slowly subsiding. So you can get out some of your lots at the moment, still long between 75s and 77s, and that type of brief action where you see the activity happening on the ladder, whether it's just 10 ticks before a key level, 161, say 98 is a key swing high. But if you start seeing the big orders coming into the order book, 10 ticks below that, instead of waiting for that, well, you could be leveraged up heading into that level. And that is really the true power of the ladder, is seeing really when the orders get active as opposed to waiting for a static linear level. The markets are about orders. Orders are what activate movements, not levels can trigger potential order movement, but it's when the orders come into the book, and the orders can come in whatever prices or whatever range, whenever any big institution needs to execute anything, well, then that's the time to start entering your trade. So this is a nice brief example on a month-end trade where you can start seeing orders coming into the market where someone was bidding the 75s and 76s passively, and then all of a sudden you saw some really big orders. When we saw those 1,000 lots on the offer, they were trying to get their buys away on the buy side. So this is an exercise worth looking at. This was on the month end in April. So if you wanted to look at this again and watch it a little bit closely, the last 5 minutes, 10 past 4 to 5, 16 minutes past 4. So between 10 past 4 and 16 minutes past 4, have a look at this in a replay. Slow it down the speed, watch it closely, start understanding, take your notes on this type of activity when you get to the modules on your replay drills, which starts from module 8. Okay, all the best, and I hope this made a little bit of sense for you. Now, to really hit home of the major benefits of price ladder information gathering and execution versus exclusive charts, we'll use a video, and I really want you to watch this video to really illustrate to you the point of why there is absolutely no reason, or you're putting yourself as a distinct disadvantage if you're not executing on a price ladder, if you're trying to optimize your size in high probability plays versus reducing your size as the market shifts its personality when you're observing a certain type of play on your charts. So what we'll be doing is looking at some working examples and one specific example actually of the difference between executing purely off a chart and off a price ladder, and we'll be showing you a month-end trade, and we'll also be really focusing on how that trade exists intra-range, where you would not be taking this opportunity if you're just trading on a chart. And really, it's the ultimate professional profitable price ladder trader can paint the chart structure in his head, and we'll be looking at this in our drill in the next slide. This is possibly the most important drill of the entire course, and it's a drill not that has specific objectives or outcomes like the rest of the drills that we'll be doing in all the other modules, but it's a drill that will develop your pattern recognition skills like no other, or your development of your unconscious pattern abilities. And this is almost a meditative type of drill. It's a little bit far-fetched, but it really goes with the ability of using certain types of cognitive training skills and really how to solidify your learning. So what I want you to do, and I'll explain a little bit in the end why this drill is so important and what we're really trying to achieve from this drill. But I want you to take 2 sessions a day. Of those 2 sessions, 3 key hours of focus. So for example, if you're trading in Europe and you're trading between the hours of 7 till 10 a.m., so the European cash, let's say in the UK time, so you're trading from 7 until 10 a.m., pure focus, incredible stamina by just watching the ladder of one particular core market. And so you do 1 in the morning for 3 hours and then 1 in the afternoon for an entire week. And actually, if you really want to become, and you're very serious about becoming a price ladder trader, which I hope all of those who are participating in the course, it's the main reason why you're participating in the course, is to become an extremely successful order flow trader. Now what I want you to do is, after each session, sketch out the chart of the market. So without looking at the chart, I want you to effectively, and this is developing your price memory recall skills, because the moment you have great price memory recall skill, you're able to actually put the contextual patterns all together. And just a brief little simplistic example is, for example, a market approaches price approaches a certain level 4 times each day in a week. So it approaches 50 one day, approaches 50, the same price 50, and every time it approaches that level, it gets sold back down into. So it approaches it on Monday, Tuesday, Wednesday, and Thursday. And then by the time Friday comes, when it approaches 50, the order flow, the way the market starts interacting, completely changes. And just by that subtle shift, because you've remembered how the market trades there every single time, because you've built that price memory pattern skill in your head, you'll know this time the market is ripe for potential break, and you're able to really exploit your size and put on a lot more aggressive size into the market. But now what I want you to do is, at the end of each day, or the end of each session, the end of each 3-hour session, I want you to really focus, concentrate, get that piece of paper and draw what the market, and whilst you draw the market and the movements of the markets, I want you also to, whilst you're drawing it, remember what the order flow looked like, what the ladder actually looked like, what the exchange looked like, and where you draw and you see all the turning points, put the prices down. And I want you to do that every single day. And I actually want you to do that every single day of your career. Because you, by doing this, you are so rapidly increasing your deliberate cognitive abilities. And it becomes a very focused, deliberate practice. And effectively, in time, you might not never even ever need to use charts, because your brain power and the operating system that's inside your brain is able to really chart it in your brain, but it charts it in a 3-dimensional element, not in just showing pictures of the chart. It plots it with prices and volume activity, and then as the markets evolve, you really start picking up these patterns in a very accelerated manner. And as I mentioned, then add a 3rd layer dimension by recalling price ladder volume events. So if you plot for those 3 hours, the market is just oscillating in a certain range, then all of a sudden you observe that the market becomes really active at a price, and then you get this really strong, powerful 30-tick move in a 2-minute time period. I want you to be able to recall where you observed the shift in initiative activity, this might be difficult for you to grasp now until you've done all the other modules. But as you do all the other modules, I want you to be doing this exercise. And I've mentioned there, do it for a week. I want you to do it for the rest of your career if you're really serious by developing your pattern recognition skills. And really, this builds your, as I've mentioned, this builds your unconscious pattern recognition inventory. You want to operate like Neo in the Matrix. You want to have that ability where you can formulate, calculate so many thousands of different scenarios, because you are developing this rapid inventory in a very conscious, deliberate manner. And I want and attach this to your profile for the month on the database as a monitor to for your recall skills. Maybe in one of the forum rooms, you can attach just of the market of what it looked like during the whole week. The whole week, if you're able to sketch what the market did in your brain, in your mind, how it did on the week without looking at a chart, you really are developing your skill set. And like I said, not just with a chart, but in context with a third overlay, the third dimension of what the ladder order flow activity looked like. Do this every day of your career, as I mentioned before. This if I really knew about this at the beginning of my career, I think I would have been where I am now in observing certain types of order flow patterns within probably I would have done that in 2 years instead of 10, 11 years. This is the importance of, we've already applied these techniques to some of our young graduate traders, and the ones who are deliberate, who are practiced, who do take their learning methodology serious, are the ones that you see develop incredibly quicker than the other traders who don't. So good luck with this drill, and really remember, this is possibly my favorite drill, and the most important drill. It's my favorite drill because it's a drill that really enhances your ability to pick up patterns in the marketplace.